So you find us in the last stretch of the show, and this morning we're going into property between 2:30 and 3 o'clock. I told you that Neo and Olebogeng will be coming through here, and here we'll be talking about defaults, right? We're talking property loan repayments, defaults. You know very well that there will be bonds that will play themselves out, and a lot of people would, it starts exciting, right? You're excited, things are moving, you're on the move here, but life happens, right? Life happens, and people find themselves having defaulted. So this morning we're putting this under the spotlight because the credit bureau, there's a data that is coming through here from the credit bureau that shows that defaults, however small, have increased in property repayments and mortgages. So in recent years, in recent days, we see people not able to keep up with their obligations. And this morning, we're going to look at what leads us to these spaces, the implications as well. And this morning, I want to ask the brothers about how then can one avoid this? What could be the available options for you to really more or less find yourself having avoided this? If you are one person that is listening to us this morning, you want to go into this one, you're welcome to go into it with us on 0861 987 000. And then my ex, we go by at Power FM 987 at Katlego Legodi _ I'm here with Neo and Olebogeng Nong. They are coming through from Nong Wealth. And this morning, they're going to help us make sense of some of these issues. They are property investors and founders of Nong Wealth. Neo, good morning. Welcome to the show.
Good morning, Katlego. I'm really excited to be here. Thanks for the introduction.
It's always lovely to have you guys on, Lebo.
No, thank you for having us today again. It's always awesome to have you, to be here, man.
Yeah.
And just considering the weather, man.
It's
getting
tricky.
really cold, eh?
It's tricky. Even though the voices are starting to tremble, but we are glad that we're alive. I mean, that's all that matters. We navigate the weathers, the storms, and everything else. Everything that comes, the seasons of life, and this is it. The season to go through this, the temperatures.
Of course.
So let's keep warm in our properties. Because we tend to get the credit bureau giving us a bleak picture of what has been happening in this space, and one would say it's I guess linked to the economy, whereby the hardships are playing themselves out, people feeling squeezed left, right and center. Hence you would always hear them looking at the announcement around the repo rate and how then they tend to be affected by some of these things. But the data is saying to us that there are people that are defaulting, and this is starting to be a cause for concern. Have you guys picked up on some of these issues? Has this been your observation as well? And how do people then find themselves having to default here? Is it a matter of you having gotten a bond and then you are paying that bond and then you fail to pay that bond? Hence, we see them saying it's a property loan.
100%, Katlego. We were having this conversation with Leo looking way back until 2010. What happened during COVID? No, 2020, right? During COVID. Right? So what then happened is that the interest rates were at their all-time lowest. So now you found out whereby the government was trying to stimulate buyers to come and play in terms of taking bonds, right? Because the interest rates were really low. So what then happened is that a lot of people looked at their affordability at that point in time in a best situation. So they didn't really forecast it in a sense whereby if it does go up, will I still be able to afford this house? So right now, interest rates have went up again. So now that's why a lot of people are finding it difficult to then balance their expenses.
So it was a favorable moment for you to purchase, but it was not going to stay like that forever. Hence, then you see people not being able to buy. Is it the case that then when we see the interest rate playing itself out, it does somewhat deceive you? You'll need to do your homework into understanding the long-term implications of how you're going into applying for that property.
100%, man. Because when you're looking at what the interest rate does, is that it fluctuates, right? So you'll find out that when the speech is going to come right now, they're going to say that interest rates are going to decrease. So now the question is, are you buying the property solely based on the interest rate, or are you buying it because of your affordability? I mean, if I can just be open with everybody, in 2020 there was one of the properties that we bought for rental, and now looking at our rental amount that we were paying on a monthly basis was around 7,000. Now that the interest rates were actually increased, it was 7,000 in 2020, but now if you're looking at it right now, we're paying around 8,500. So now that's a difference of around 1,500. Now looking at your normal person that is buying a property, they don't also consider that 1,500 jump. So now this is a property worth around 700,000. So you can only imagine what's happening to the guys that bought properties worth around 3 million. Now they are having a bigger bump compared to what it was in 2020. And right now we're actually seeing a lot of people that are selling their properties where they bought between 2020 and 2021. And now that's the factor that's causing a lot of people to actually try and sell their properties.
So you basically try to navigate this by what? By trying to at least get out of it without having to lose altogether. Because I guess if you are defaulting, at some point you're going to lose the property because you are in the red. So how does it play itself out? Is it a matter of you maybe not having the money when it's supposed to be deducted at the end of the month, and then it goes into the second month, it goes into the third month, or these would be issues of here and there when maybe probably the money is not there, and then you move into a space of finding that you're working behind. How does it play itself out?
So how it plays itself out, Katlego, as we did mention, is that these meetings usually come through whereby the governor will then let us know in terms of did the interest rate go up or not. So let's just say that it did go up this time around and next time, and then now someone is looking at the expenses, because we're even looking at the budget speech whereby it was written there about 77% of the income of our people is actually going to expenses. So now it's literally something whereby you feel as if it's a train that's not stopping. It's just going up and up and up, and then you finding yourself in a situation whereby you can't pay this month, you can't pay the next month. So we really need to acknowledge like the first month whereby you see that this is an issue and attend to it as soon as possible.
And where does then the bond originator fit in this? And maybe let's start by explaining to our listeners who is a bond originator. What does a bond originator do? Because one would expect that the bond originator would explain what the pros and the cons, and explain to you that maybe the reason why you're seeing this property, it's a lovely property market-wise, it's going for 3 million, but this time around you find it got 1.5, and because it's a favorable time to buy. Let's start with understanding who or what does a property or bond originator do, and where do they fit in guiding you around the pros and cons as you are excited about getting into this property.
Yeah. So a bond originator is basically someone that will go and negotiate on your behalf to the banks for them to get a favorable interest rate for you as the property buyer. So they don't know the market value of the different properties. What they know is your credit score and will you be able to afford the property that you're going to be buying right now. Now, where they come in is when you're buying the property. So when you buy a property, you'd go approach the bond originator and tell them that I want to buy a property, but now I want you to go negotiate a favorable interest rate for me. Then that's when they're going to be applying to the various banks to get you that interest rate, the best interest rate. Now, when you're going back to the bank and saying that you want to renegotiate the interest rate that they have actually given you, in that way, the bond originator is not involved. It's you going directly to your bank and saying that, look, I've been paying you for the past 5 years, 7 years, and now that I've been paying you for the past 5 to 7 years, can I actually get or negotiate my interest rate and try to decrease it?
And usually, what this comes through as what, a 20-year term. All right. Is it a standard 20 years or it differs? I can actually get a bond here that goes into 5 years, that goes into 10 years and the likes. Or that's what a bond originator does. They negotiate for you in line with what your affordability would be.
So it can be 20 years and you can also move it to 30 years. But remember something is that sometimes what happens is that if it's 30 years, you're looking at it for you're paying less on a month to month. However, you also need to remember that you'll be making more payments.
Yeah.
So ultimately you will be paying more in comparison to 20 years, which is less than the 30 years. However, you're paying more. And another thing that we also need to take into consideration is there's variable and then there's fixed. So what that is that as soon as you apply for that loan, you need to tell them that would you like to fix that interest rate or would you like it to be variable? So variable means that it will go up and down as it goes. So a lot of people are not informed about this, the variable or fixed. And also even with fixed, as much as fixed sounds nice, we need to remember something that even the bank is taking a risk on their side if they're fixing. So it's not that if right now it's at 11% the interest rate, it's going to be fixed at 11. The bank is going to add a couple of numbers to it. So you find out that it's at 12% or 14%, that if it does go up, sometimes maybe it will protect them. So it's really tricky then deciding which one to go for. Which one would you go for, Katle?
I would go for the variable. I will go for the variable because I don't know. I just I thumb sucked that. But which one would be favorable?
On my side, I'm looking more towards the variable, right? And now a lot of people will say that, no, I fixed mine when it was at 7%. And to be honest, the best time to have fixed it was that time, right? Now the question is now, am I actually going to be fixing it? So say for instance, if we're at 11% right now and I'm saying that I'm fixing it, the bank says that, okay, it's okay, you can fix it, but now we're fixing it at 12.5%. Now the question is it going to get to 12.5 and beyond? Because remember, the only time we win as people that fixed it is if it exceeds that 12.5. That's when we can say we're winning. But now, as long as it's below the 12.5, it basically means that we are still at a loss. So for me right now, looking at the market and how everything is going, I feel more comfortable with the variable.
So the bond originator does give you the pros and the cons, I guess, of all of these things. So what happens? Because is it just them wanting to just get that deal at all costs and get their commission out? Or they do sit down with you, break down some of these pros and the cons, give you a sense of the variable interest rate and the fixed, and give you a sense of how then you can even approach this one, the interest rate and the issue of the dynamics that would play themselves out that may affect you in the long run.
It doesn't happen all the time, Katlego. So that's why this information is very important for us to know and be calculated about so that we can take those informed decisions, because sometimes it's more about let's close. And now you find out that you opted for something that you didn't even know, because we also remember a client of ours, she was happy that she fixed, but she didn't even know at what price did she fix it at. The time she realized it was at 15. Imagine being excited that you fixed, but you're at 15% and it hasn't reached 15%. That means she's been paying premium for the past 5 years.
That's something else. But you mentioned as well that there are ways around this. Can I go to the bank and tell them that I'm struggling here, and then maybe we try to tweak the terms? And then instead of it now being 20 years, we stretch it to 30 years, and then we take down my installment. How does it work? Can I now, without the bond originator, approach the bank to say this is what I'm facing right now? Because we always hear people being advised to say that don't run away. Instead, try to negotiate so that you get the best deal out of this space. Because then if you're running away, it only creates a bigger of a problem.
From my perspective, right, the banks are always willing to negotiate, especially if you have been paying them correctly on a monthly basis, right? Now, going back to the bank and saying that you'd like to extend the loan agreement, right, or the interest rate, we need to also consider that how far were we from completing the home loan, right? Because we had another client, they were only left with 5 years. They went back to renegotiate. Now, after renegotiating, yes, the premium was lower. However, it was extended again to 20 years. Now, imagine being close to the finish line, and now I have to go back to the 20-year contract again. that becomes a bit tricky. But the banks are always willing to negotiate with you, and then some banks are always also willing to help you sell your property, because that's something that a lot of people need to really consider. Because if right now the interest rate is sitting at 11% and you bought it when it was at 7%, chances are it doesn't make financial sense for you. So you might look into, or you might want to look into selling your property through maybe the bank. So sometimes you do have easy sales with FNB, I think. Yeah.
We always hear issues around the credit score, right? Because these would be some of the issues that the bank will have to look into before they give you a loan, to see if you are a risky person or not, and if you be able to even keep up with these bond in the long run, so you don't find yourself defaulting here. What role does it then play in terms of, presenting you as someone that won't default, as a healthy person or not? Do we see the banks, when the bond originator approaching them, do we see them sifting through who you are and taking some of these issues into consideration? And can some of them say, no, not a favorable individual right now, maybe try next door?
Yes, that's exactly what happens. And the main question that a lot of people like asking when it comes to this one is, what is the minimum credit score that one should get before applying? But we're forgetting something, that let's just say that we're saying it's 560. Why would you still apply with 560? I'd still rather wait for another year, maybe push it to about 600 or even 700 if possible. Because remember something, a lower credit score results in higher interest that you will be paying. And I mean, this is for a term for 20 years or even 30 years. So I'd rather work on that credit, even if it means for another year, and then get premium credit score so that I can be paying less from month to month.
All right. Level?
Looking at it from credit score, man, credit score is, especially as an investor, right? This is your pulse. This is how the banks are actually looking at you and saying that, should we actually give this person a loan? And I like the fact that we started with a bond originator. Now, with your bond originator, they are the ones that will negotiate with the banks. So I'm about to expose Neo right now. Neo was with a certain bank, right? And that bank had rejected him. Right, but now because he had a bond originator, or he was working with a bond originator, the bond originator applied with the different banks, and then she got 3 other acceptance. Right, the bond originator went back to Neo's bank and said that your client was actually accepted by the 3 other guys. Now, what are you saying? Now, Neo's bank gave him the loan and also prime minus 1%. Now, that's something that a lot of people don't actually see. His bank was also willing to say that on top of the bond that we are going to give you, 100%, we're also willing to cover your transfer costs. Now, Neo didn't accept that. I think he was a bit emotional. But at the end of the day, that's why I'm saying that as much as sometimes your credit score might be a bit lower, but going with a bond originator, because they know how to negotiate, would be the best way to actually apply for a home loan.
What was that prime plus 1?
So minus 1.
Prime minus 1.
Yeah. So prime, say for instance, if right now the prime lending rate is sitting at 11%, so they would say the 11% minus 1, which means that your interest rate on a monthly basis would be 10%.
And the reason why I rejected it is that they wanted to help me pay off my attorneys. But remember something, let's say those attorney wanted 40,000, right? Now it's going to be added to the loan. So let's say that house is 800,000. So they're going to say 800,000 plus the 40,000. So I'll be paying that 40,000 for the next 20 years. So hence I rejected that. In terms of, I did have that cash. I was like, I'd rather pay them instead of paying them for the next 20 years with interest.
All right. Really, there's a lot that I've learned here. But let's just wrap it up and close it by giving our listeners a practical sense, a 101 to do if you are a first-time home buyer. What is it that you have to look out for? What is it that you start by doing? Who do you then approach? So you avoid some of these issues. You avoid defaulting. You avoid finding yourself really frustrated by a property that is taking away from you and is no longer the joy to stay in that property. How do you then go? Where do you even start?
Number one is credit score. Number two is save for a deposit and also your attorney costs, because you will be paying for them in that 20 years, if not. Yeah.
Then from my side, man, I would say, because a lot of people think that if I'm going to be buying a property, I need to know it all. And that's where a lot of people make mistakes, because you don't ask relevant questions, or you don't ask any questions, because you want to act like, no, I know it. So what I would say is that ask as much questions as possible. And then when they also give you the answers, because this might be the first time you hearing this, just have a pen and paper, write down everything that they're saying, and then come back and revise what they're actually saying. Because sometimes you don't ask questions, and then you only find out when you've signed the contract that I've actually signed this. Like Neo's situation, when he's saying that if he had accepted the 40,000 extra, that means that he would have paid it through 20 years. And now when you're looking at that interest, it's probably going to be around 80,000 combined with your principal amount. Now, if you don't ask questions that, okay, I understand that you guys want to give me the whole you want to give me the attorney costs, but now what's the catch that goes with it?
And why do you need an attorney?
The attorney would be the one that will transfer the property from the previous owner to into your name. So now in South Africa, you can't transfer a property without an attorney. So we always need an attorney in the deal, so that they transfer the property from the previous owner to the current owner.
And this is something that you don't get through the bond originator. It's something that you do yourself after they had secured the loan and everything else, and you basically have been approved, and they say the house is yours. You would still need a lawyer to do the transfer costs.
Yeah, normally it would be the seller that appoints the transferring attorney.
Is it? And then how much? So that comes out. It doesn't form part of the loan. It's something that is separate.
Yes.
Oh, wow. So you'll need to budget, if you are, and then because you may find yourself then having bought the property, but you're not able to transfer it because of these costs. And lawyers are very, very important. You need to get yourself as his pet, someone that can come through and help you where some of these issues are concerned. But I have to say goodbye to you guys. A big thank you for coming through and always helping us, schooling us around some of these issues. How do we connect people your way in terms of the work that you guys do?
We're on all social media platforms at Nong Wealth, Instagram, YouTube, TikTok.
Yeah, Nong Wealth. Everywhere.
Sure.
Thank you very much for coming through.
Thank you very much.
Awesome. Lebo and Neo are coming through here from Nong Wealth. They are property investors. They are founders of Nong Wealth, and helping us really this morning to make sense of how one can navigate being a defaulter, how you can, more or less avoid being a defaulter here where your property is concerned. We were talking property loan repayment defaults. A big thank you.